thank you for joining me. My name is Wesley Boudreau, one of the financial advisors here with the Retirement Group. I'm just going to go over real quickly about 5 minutes on the updated interest rates for the Chevron pension lump sum calculations for the month of October and September. So before I get started, anybody that has any questions, feel free to give us a call at 1-800-900-5867. Now again, we've got much longer webinars that go into the details of the pension plan. But for today, we're just going to update you on the interest rates that are used to calculate the lump sum. Now, as far as the annuity or the pension plan, for all Chevron employees, it's a defined benefit plan, in which case the calculation determines your single life annuity. From that point, if you want to take the lump sum, they take a look at what that annuity is, your age, and current interest rates to determine how much they're going to have to give you in order for you to essentially try and recreate that same income stream yourself. So if we take a look at this chart here, the seesaw pattern, when interest rates go up, you'll actually see your lump sum drop and come down. And the vice versa happens, which is what we've been seeing for the last year and a half. As interest rates fall, you will actually see your lump sum go up. Now we've been seeing interest rates drop a little bit, and then unfortunately with COVID-19 and that pandemic, it has exacerbated it, and we've seen interest rates drop dramatically to the point that we're seeing the lowest interest rates we've ever seen in the history of the country, which is also correlating to the lowest interest rates for the segment rates for the calculation for the Chevron pension plan. Now, if we take a look at this chart below, the way they actually calculate is they look at the third, fourth, and fifth prior month to determine it. So if we're focused on October interest rates, it's actually going to be an average of May, June, and July. So if you see this, we've dropped pretty good from May to June, and then even more down to July. Now, these segment rates, what their purpose is for the Pension Protection Act, and these are segment rates tied to corporate bonds associated with years of retirement. So the first segment is going to focus on your first 5 years. The second segment is going to be for years 6 through 20, and the third segment is going to be years 21 and beyond. Now, for most individuals, that middle segment is going to have the greatest effect or weight on your calculation. So if you take a look at that for October 2020, it's the lowest it's ever been in the history at 2.53%. For September, it was 2.74%. In August, it was 2.91%. So just from now through October, and the next 2 months, it's going to come down about 0.4%, which could be about a 3 to 4% increase in your lump sum if you wait until October to commence that benefit. Doesn't mean you have to retire then, it just means commence the benefit at that point in time, and we can go through all that in greater detail. Now, if we go back a little bit over a year, or about a year at this point, in September of last year, the interest rates were 2.64%. Now we're at 0.8, 3.72% coming down to 2.53, and 4.27% coming down a full percentage point to 3.27. So let's go back and focus on that middle segment from that 3.72 down to 2.53, almost about a 1.2% change. So when interest rates do change, usually about a 1% change will equate to anywhere from an 8 to a 12% change in your lump sum depending upon your age. So for simple school of thought, 1% equals 10% roughly. So that change of about 1.2% means you could have seen about a 12% increase in your lump sum over the last year or so. So if you ran your calculations this time last year and you were at about $1 million for your lump sum, now you could be about $1,120,000. If you were at 500 grand, you might be at 560. So the numbers correlate to your specific situation. And for a lot of you that were on the fence or looking to retire soon, may now be a good time to review that if you're leaning towards the lump sum option. Now, the opposite holds true. Eventually, we know interest rates will come up. The question just becomes when and how quickly will they rise. So if interest rates start to go up, and let's fast forward a year and say they go up by a percent or so, now that $1 million might drop down to $900,000, and you could effectively be working for free or reduced income in your last year of retirement if you were looking at the lump sum. Now, again, I need to reiterate, if you're taking the annuity, these have no bearing. This is only if you're looking to take the lump sum. And again, we can go through all those different pros and cons by running a cash flow analysis for you. So if anybody has any individual questions, I strongly recommend you give us a call, and we run that cash flow analysis to let you know where you stand, not just now, but in 10, 15, 20 years down the road as well. And we can help you determine and review side by side the pension annuity versus the lump sum. And ultimately speaking, if you're very close to retirement, give us a call so we can keep you updated monthly on those interest rate changes, because if and when they start to spike the other way, you could be losing money on that pension lump sum. So we would like to go over that with you. Now, at the end of the day, obviously, we'd love to work with you. We do understand if you're working with somebody else. We do recommend getting a second opinion. We even recommend our own clients do this every few years. But make sure the person you're working with has a good understanding of the Chevron benefits, especially the pension plan, so you don't make any mistakes and leave money on the table. Make sure you understand their fee structure. We are an independent financial advisory firm that focuses on, again, helping you transition to retirement, but we also help you manage assets, and our fees tend to be low on the industry average, and we are transparent on our pricing, and we're not a one-size-fits-all firm. Make sure you are working with an investment management team. It's not just one person doing everything for you. And again, update that cash flow analysis. Even if you've done one with us and it's been over a year, give us a call because of the change in the market and interest rates. It may make sense to update that once more. So with that, I want to make it quickly and just give you that update, but wrap it up. Ultimately, just give us a call at 1-800-900-5867. We'll be happy to elaborate on some of these and apply that the interest rates to your specific situation and answer any of your questions. I want to thank you, and I hope you have a great day and stay safe.